All right, everybody. Thank you for your patience. We are going to get started. My name is Daniel Vitaletti. I am Senior Associate on CECP Strategic Investor Initiative, and I am proud to introduce my colleague, Brian Tomlinson, our Research Director and Resident Expert on Long-termism, who today is going to present to you on why CEOs should share their long-term plans with their investors. And Brian?
Good morning and good afternoon, everyone. Thank you for getting on the line today and your interest in our work. I'm going to walk through a deck which sets out some of our work at the Strategic Investor Initiative and some of what we've learned from working with both companies and institutional investors from delivering long-term plans over the last 2 to 3 years. Next slide, please. One of the concerns has been the overall short-termism in our capital markets, and you see that expressed from a number of different constituencies. And the investor-corporate dialogue has often been regarded as being one of the key pieces underlining the concerns around market short-termism. So in our work, CEOs have told us that they are concerned that short-termism is a problem and that they think that CEOs themselves are too short-term in their own practice. Institutional investors have also told us that only a minority of their portfolio companies are doing a good job in successfully setting out their long-term strategies. We've seen a clear demand side for more long-term information from institutional investors. We've seen the calls from people like BlackRock and Vanguard for companies to take a long-term view and share more fulsomely their long-term plans for sustainable value creation. We've also seen companies trying to move away from practices in their relations with their investors that may amplify short-term pressures. So for instance, over the last couple of years, you've seen a steady decrease in the number of companies issuing quarterly earnings per share guidance. And that guidance is now disfavored by the National Investor Relations Institute. That was a statement that they made in their guidance statement last year. And we do hear from investors that their preferred forward-looking financial guidance is over a 3-year period rather than a quarterly earnings per share guide, but only a minority of companies are really giving long-term financial guidance. And then we do see across academic and practitioner studies concerns that there are real-world impacts from market short-termism. There's a seminal study which indicates that companies are inclined to cut discretionary spending in order to meet a short-term earnings target, indicating that the capital markets and companies' interactions with the capital markets can cause managerial myopia and decisions that are focused very squarely on the short term. And we do see evidence, some very good studies from both McKinsey and KPMG indicating that using a series of proxies to underscore what makes a company long-term, that long-term companies tend to outperform their peer firms across a range of metrics, whether that's in terms of financial performance, job creation, and earnings quality. And we have recently seen regulatory interest as well around this concern of market short-termism. We were delighted to speak at the SEC's roundtable on short-term and long-term public markets a couple of weeks ago. Terrific to have our work featured in that forum. The SEC, I think, has expressed concerns about the decline in the number of public companies since its peak in the late 90s. And there is a thought that some of that decline may be accounted for by short-term market pressures, obviously in addition to the rise of private markets. But it is an issue of regulatory interest. Next slide, please. And then a related issue to short-termism is ESG. Many ESG issues, whether it's stakeholder engagement, human capital, or corporate governance, have a naturally long-term time horizon. And so ESG is often a very clear part of the information that is requested on long-term themes. Investors have demonstrated, I think, very clearly that they have a significant interest in more fulsome and better disclosure on ESG themes. This slide is just an attempt to indicate some of that volume. We could use a series of other data points. A couple of my favorites to do that would be the SEC concept release on Reg SK from 2016, where there was a vast number of comments on the sustainability reporting section of that concept release, and the overwhelming response from investors was to seek more and better ESG disclosure. Investors have also submitted rulemaking petitions on ESG disclosure to the SEC, and you do see in things like the National Investor Relations Institute ESG policy statement a broad understanding that companies need to engage with ESG and talk to their investors about it and form a narrative around ESG. Additionally, I think investors' expectations of their own practice have changed. I think ESG started out being related to kind of SRI and perhaps into some minds politics. And now I think it is much more understood that ESG is part of a fundamental investment process and understanding the companies in which you are invested in. Investors have also indicated through their engagement priorities, the shareholder proposal process, etc., whether it's engaging with companies on political spending and climate change, that these are concerns for them. There are also academic studies out there that indicate that companies which have a better sustainability performance, again, tend to outperform their peers. And we have outlined a couple of those there, which are very worth reading. And investors are saying that they see ESG as just becoming more and more part of their mainstream practice. And there was a recent survey indicating that they expect it to be sort of fully mainstreamed over the next 5 years or so. So I think the direction of travel there is clear. Next slide, please. So it seems that we have this context of a concern over short-termism, a concern that it has real-world effects, investors asking for more information, companies wanting to disclose better information about their long-term prospects. So to respond to that, one of the things that we've been doing is to kind of get beyond the blame game of whether investors and CEOs are responsible for this disconnect, and just put CEOs and investors in a room to enable CEOs to outline their long-term strategic plans and take questions from those investors. You'll see here we've convened a great slate of companies over the last 2 to 3 years, with more to follow. We enable CEOs to deliver a conference-style investor-facing presentation. We'll touch on some of the content of that later on in the deck. We enable the CEO to respond to investor questions also, and we go through a briefing process with each of the companies that delivers these long-term plans, to help them build their presentation, and then to provide them with feedback on the presentation that they delivered, which is culled from the feedback that we receive from institutional investors. So it's a nice tight process for companies to come work with us, deliver a presentation, receive feedback, and then think about how that starts to change your reporting mix in the future. Next slide, please. So we wanted to talk very briefly about some of the reasons why companies have delivered a long-term plan at one of our CEO investor forums. So we've spoken to the companies that have presented, and these are some of the things they said about why they wanted to do it. So firstly, these are listed on the left-hand side of this slide. Respond to investor interest. I think that topic is pretty clear. There was some expressed frustration at short-term focused market infrastructure. The earnings call tends to dominate the discourse on the company's value, and is an excellent venue for talking about quarterly earnings. but it may be a less well-calibrated venue for talking about issues with a longer-term time horizon. So there's an interest for a company to find different ways of getting its long-term strategy and long-term value creation narrative in front of its investors. There's also this interest in consolidating existing disclosures. You know, companies have vastly expanded their reporting ecosystem over the last few years, particularly in voluntary forums around sustainability reporting. And there's an interest in trying to talk about that narrative with investors and wrap it all into a coherent strategic narrative. I did a paper with my research colleague, Mike Cruz, where we looked at the disclosures of a well-known oil and gas company to see how many disclosures we needed to look at to complete the kind of content expectations we have for a long-term plan. In order to do that, we had to look at 13 individual pieces of disclosure across mandatory filings and voluntary disclosures. So, you know, that is a huge amount of work to get a sense of what a company's narrative is and could do with some simplification. Many of the CEOs indicated that they really wanted to be a first mover and a leader in this key space. They've heard the message from investors. They want to signal that they have a long-term outlook, and they hope to receive the sort of loyalty and commitment from their investors to support that long-term strategy. Another is to think about investor segmentation, which is, you know, how you disclose to the market affects who owns your shares. Investor relations professionals tend to want to attract more long-term investors in their investor base, and you want shareholders that are going to support your strategy over the long term. Through more long-term focused disclosures, you can over time adjust your investor clientele, meaning that you have a larger share of longer-term investors than more transient investors. And there's all sorts of evidence to suggest that that's very good for managerial decision making. And then again, this final point, you know, we've seen the rise of activism in different forms over the last several years, and companies said that they saw this long-term plan concept as being a really good way of building relationships with investors that have a longer-term investment horizon. As one of the companies said to us, you know, tell the story or others will tell it for you. Next slide, please. So obviously a company has a already very large and well-developed reporting system, reporting ecosystem of investor days and conference presentations, roadshows, the earnings call, and other sort of mandatory and voluntary disclosures. We want the long-term information that we're seeking to fit into that in a way that works for companies. We also think there is some significant value to companies setting out a coherent long-term strategic plan. And we think companies can set out and refresh that information annually. Investors have indicated that, such as BlackRock have indicated that is their preferred time horizon for refreshing this sort of information. And we also think there are other event triggers for resharing and resetting out this type of information. One example of that would be, for instance, CEO transition. Next slide, please. So again, we've talked to companies about their process for building these long-term plans, what worked, what didn't, what was hard, and we've taken some learnings from that. One of the things that we've really seen is that disclosure essentially operates as a kind of forcing function within some of these companies. Companies are often having to disclose to their investors new information that's perhaps been part of sustainability reporting, but it's not been part of investor-facing reporting. And in order to do that, new internal collaborations and kind of level setting on issue significance has to take place. So we've seen quite a lot of that from the companies. On the left of this slide, you can see a few of these suggestions about what was needed to get this done. as I mentioned, cross-team collaboration, developing a shared understanding of materiality, particularly between investor relations and corporate sustainability. We've seen a significant increase, as I've said, in investors asking for ESG information. Sustainability information has often been disclosed sort of outside the investor reporting ecosystem. So sort of getting comfort across teams about what to disclose and what's important is a very important process that a number of our companies have gone through. And all of this obviously requires sort of an unsiloing of ESG. And some of our companies have indicated that, their sustainability teams were kind of brought more deeply into the investor presentation preparation process than they had been in the past. As one of our companies said in the quote below, in order to get this done, we locked investor relations and CSR in a room until they agreed on what was important. Which is an interesting process, but one that was very successful for the company. Again, we set out some disclosure principles, which I think would be common sense in most situations. Just to highlight a couple that we give to the companies. Obviously, we want a lot of forward-looking information in these plans with a fairly long-term outlook. That's a mixture of operational metrics, aspirational targets, and often some forward-looking financial information. Materiality, to make sure the presentation is focused on the things that are important to your industry and your business model, rather than the things that are nice to have. And those companies that have taken that guidance to heart, I think, have done a very good job in their presentations. And next slide, please. So one of the things that we have done, having talked about the demand for more long-term information, some of the benefits for companies in terms of delivering that information, internal process benefits, I wanted to talk a little bit about, just at a very high level, some of the content expectations that we've set out for a long-term plan. We actually started delivering guidance on this to companies in early 2017, where we issued a letter to CEOs from institutional investors. That letter was signed by people like Vanguard, Neuberger Berman, CalSTRS, State Street, and others, where we set out in high-level terms the importance of companies giving a long-term view to the market, trying to communicate over a longer-term time horizon, and then talking about some key themes such as megatrends and corporate governance. That letter also sets out 7 questions every CEO should be able to answer related to some of those themes that I just identified. We then sought to do some more specific work to provide more detailed content guidance to companies, and we came up with this long-term plan content framework that builds on the work of many organizations in this space. We're not working alone here, such as FCLT Global and McKinsey and others, but specifically we worked with George Serafine at Harvard Business School and KKS Advisors to develop this framework. And as you can see, it is something of a blend of things that you may see in a traditional investor-facing presentation, and then themes that are often part of sustainability reporting, and really trying to combine those together into a coherent narrative. So to just identify a couple of these items, we've had companies talk fulsomely about the megatrends that impact their business, whether or not those are the aging demographics and healthcare costs for sort of pharmaceutical companies and healthcare, whether or not that's the move to AI and automation in terms of automotive, or more broadly for utilities, the transition to the low carbon economy, and also the increasingly sort of urgent concerns around the effects of climate change, causing utilities to have to change their generation mix and also harden their infrastructure against extreme weather. So an example of some really good, really interesting disclosure that we've received from companies there. On capital allocation, again, for a company to set out how it really thinks about applying its capital over the long term, its enduring frameworks, how it considers the balance between reinvesting and returning capital to shareholders, and how it seeks to preserve and increase its R&D investment in the face of often short-term pressures. A key topic that we want companies to talk about is corporate governance, particularly the role of the board in strategy and how board composition relates to the long-term strategy outlined. Again, we've had companies talk very well about how their board of directors is enabled to engage in long-term strategy and how their board composition is adjusting to the trends that they have identified. Again, long-term value creation would be another one where we're asking companies to talk about the sort of partnerships and innovation and how they think about their value ecosystem. So we've had companies talk about how they've built new markets for themselves through interacting with, for instance, local healthcare infrastructure to train key staff so that their products can then actually be used in that market. A boon for the company and also for the geography in which they are seeking to sell their product. So this is obviously a lot of information for a company to try to put out in a single presentation. And some companies have sought to really focus on the key elements that they want to really focus on to tell their story. So, we've had a utility company that really spent most of their time talking about trends, capital allocation, and corporate governance, and much less time on the other themes, because that was what they needed to do to set out their long-term strategy. But we also want this to be non-prescriptive, giving companies an opportunity to relate to this information in a way that's relevant to telling their story to their investors in a credible and meaningful way. Next slide, please. One of the other things that we've been doing, again, in concert with George Serafeim and KKS Advisors, is to look at the plans that have been delivered and to see how the companies are doing in terms of the call for providing more specific information and more forward-looking information. When we look at the presentations, we use a scoring framework inspired by the Sustainability Accounting Standards Board. So we look at the disclosures on a no disclosure boilerplate, metrics backward, metrics forward basis, with obviously metrics forward being the most sort of highly prized information. And we can see companies really making progress in terms of the areas where they are disclosing more and better information on forward-looking metrics, which we are really pleased to see. Next slide, please. And the other element that we wanted to do here was also to look at the extent to which the markets found the long-term plans that have been delivered to date to be relevant to the considerations of value. So we conducted an event study through, again, working with Professor Serafeim and KKS Advisors, where we looked at whether or not the markets respond to the presentations delivered to date. We used a very robust and well-known methodology to do that. And we found some interesting information, which was that the markets do seem to respond in terms of stock returns and trading volumes to these presentations, which provides us with just early evidence that the markets do find these presentations to be value relevant. We also found some patterns in the disclosure with companies being a bit more comfortable talking about things like competitive positioning and trends, and actually a little less comfortable overall talking about corporate governance. However, overall, we have seen progress from the companies not disclosing on these themes to more companies disclosing on these themes, which we see again as a useful indicator that the general level of comfort with the content and the materials is improving over time. To identify a couple of presentations which were very good indeed, BD, Becton Dickinson, healthcare company, Medtronic, Nestle, and Aptiv. All of those are available on our website and are worth digging into as examples of good content-rich presentations with quite a lot of forward-looking information. Next slide, please. And so just to finish this section, we really have seen some progress in terms of the qualities of disclosures. Often when it comes to ESG disclosures, you've kind of got to start somewhere, and you want to find an easy way of talking about the fact that you are making investments in sustainability themes. Often companies found a relatively easy way of doing that to sort of talk about some of the awards that have been won on ESG themes or such as diversity. And that's good and laudable to point to those things, but doesn't necessarily give investors much valuable information to engage with them on their ESG performance, and also on the themes that the company really thinks that are important for driving value over the long term. Next slide, please. So we've seen a little bit less of that and a little bit more of this over time. This is just Nestle's materiality assessment, which we thought was very good and full of good content, and really gives investors an ability to understand what are the key issues that management has in front of it. And then, investors can then ask, how is it going to then manage those and ensure that those are an opportunity rather than a risk over time. So that's a sort of overview of our work, some of what we've learned, some of our work with companies. One of the things that we are also doing, in addition to the work of helping companies come to our CEO Investor Forum and deliver long-term plans, is to form an Accelerate community, which my colleague Daniel will describe.
Great, thank you, Brian. This year, the Strategic Investor Initiative is happy to announce that we are launching an Accelerate community on long-termism and long-term sustainability. Some of you on the line may be familiar with our Accelerate communities. For those of you that are not, an Accelerate community is a gathering of about 5 to 10, sometimes more companies that come together and work together for the course of the year to advance a body of work on some particular issue area. So for us, we are going to be focusing on long-term sustainability and value creation. So this community is designed to help a cohort of about 10 to 20 IR, CSR, and sustainability executives to develop their long-term sustainable plans. And as Brian had noted earlier, this helps them to better communicate their ESG story to their consumers and their investors. I think that most investor relations reporting tends to provide backward-looking information, typically over the past 3 months. And most sustainability reporting tends to look back over the past 12 months. The long-term plan framework that we explore in this community will provide forward-looking information to your stakeholders as to how the company plans to sustain its social, environmental, and financial performance over the long term, which, again, as we noted earlier, could be defined as anything from the next 2 to 7 years and beyond. So this community will give companies an opportunity to understand why they should bake long-term sustainability into their strategic business plan if they're not already, what disclosure should be included, how to do that within your company, and ultimately what the value or return on investment will be for going through this process. If you participate, you'll develop an in-depth understanding of the 9 thematic areas Brian had mentioned and the 22 line item disclosures that we developed in partnership with KKS Advisors and Harvard Business School. You'll hear from leading companies about their experience of having gone through this process already and presenting to their stakeholders. And again, you had seen earlier in the presentation, about 31 companies have either presented or committed to present their long-term plans to date. And the majority of those are Fortune 500 companies. You will also enjoy guest presentations from leading practitioners in the field. And by the end of the community, you'll have developed an investor-facing long-term plan presentation and also an abridged version that you can include in your investor toolkit or your annual sustainability report. And these are some of the folks that have been invited to participate in the community to speak to the topic of long-termism and why it's important to integrate that into your core strategic business plan. And with that, we're going to conclude. If you would like to learn more about the Accelerate community, please contact me, Daniel Vitelletti. My email is here. I'm happy to answer any questions you may have and provide additional information. We will send these slides to you at the conclusion of the presentation and also a recording of the webinar. Again, if you have any questions, feel free to direct them to me, and I can put you directly in contact with our research director, Brian Tomlinson. Thank you all. Hope you have a great day.